Happy New Year, everyone. Welcome back to the Wall Street Blockchain Alliance's Crypto Roundup, January 9th, 2026. Ron Quaranta here with my amazing friends and co-hosts Joshua Clayman and the now frozen David Brill. We'll get David back soon. It's good to have you all. It's been too long, Josh. Our usual disclaimers before we begin. For everyone watching, thank you so much for joining us on LinkedIn Live, on X. We'll be recording on YouTube as well. Please keep in mind, nothing discussed really is any sort of advice at all. And the things that Josh and David and I discuss are really our own personal opinions and not necessarily the opinions of our respective firms. As we work to get David back, Josh, I do want to kick it off with one thing real quickly. It's been almost a month without our crypto roundup. It hasn't felt right, and it's good to see you, friend.
It's great to see you too, and it's great to see David too.
It's always
There
good
he
to see you.
Okay, I went to cell phone plan B.
Cell phone plan B.
It actually looks really clear, David.
Oh, okay. Well, that's good. At least something worked.
David, Josh, we've got a lot of catching up to do. I've gotten the multiple emails from friends, colleagues, and fans of the two of you saying, where is the roundup? Let's do the usual. How were the holidays for you both?
David?
Josh, you go first.
You go first.
Oh, okay. It was great. I mean, they were great. I think it was good to have just that psychological break. Well, maybe that's a weird way of saying it.
When you're working with me, that's
not a break with
guaranteed to be correct.
reality. But no, just having that idea of like, okay, you're now wrapping up that year, you're into a new year. By the way, I keep seeing my face blur, and so I might take off the blur from the background. But yeah, it was great. I think it did seem like a long time without you guys. But
Yeah.
how about well, David, do you want to answer, or Ron, do you want to answer?
I'll answer. I had a great end of the year. I got to spend some quality time with my daughter and was in South Florida for the new year with some other family who were in town. So I had a great end of the year, which made up for the surprising price of crypto at the end of the year. So at least that balanced it out a little bit. So no. And I'm very energized for 2026.
I likewise, my friends, had a quiet holiday season, which is always good. David, I saw on the Wall Street Journal Mansion section that a $35 million penthouse went up. Was that yours?
It was not. It was not. But real estate is going to be really interesting this year if we do get some rate cuts, if we start to see things loosening. But no, my penthouse is not on the market.
He didn't deny that he had a penthouse, though, Josh. Josh, David, let's jump right into it. We've had so many members and colleagues who reached out about the roundup. David, Josh, 2025 from a crypto perspective was a bit of a tough year, particularly the last quarter. It definitely felt risk off across the board. That dynamic shifted a bit. BTC is holding 91, David. Some of the alts are moving. I want to ask a question which might simply be a basic question. David, is this in anticipation of looser money in 2026? There's a macro conversation behind that we have to have, but what do you make of the current moves?
I'm actually going to be contrarian here, Ron. I think 2025 was actually a good year for our industry, just that the price wasn't really reflecting all the movement that we've made, all the progress that we're going to see in 2026. And, the three of us will talk about where clarity is in a little while, or whatever we're calling it now, if we can get clarity on clarity. But so I'm going to push back on that. With regard to the markets, I really think that the liquidity in our markets has been taken away by some of the crypto companies that went public.
Yeah.
The hot AI narrative. And also people have been putting money in gold and silver. So, ironically enough, crypto, as cool as we think it is, was not a sexy story in the second half of 2025.
Yeah. And David, Josh, we've talked about the fact that when it becomes boring, then it becomes institutionalized. And David, I don't want to imply that it was a bad market. I think a lot of real good growth and development happened, but you're right, the markets didn't reflect it. David, but when we talk about that, and Josh, I certainly want you to weigh in, we're beginning to see the talk about that institutionalization. So for example, for I think the last 2 months of 2025, it was ETF outflows all the live long day, David and Josh, and now it's inflows on the order of a couple of billion per. Morgan Stanley is launching its own crypto ETFs. Josh, how does the Clayman family office respond when the market pivots like this? Is this just a reflection of the progress that the crypto space has made?
I mean, it's a great question. I tend to agree with what David was saying, although like when I think of 2025, maybe it's colored more, well, I'm sure it's colored more about all the regulatory developments that we've gotten and things like that, like a sort of period for being able to set up, you know, things going forward. But yeah, I mean, frankly, you guys know me. I'm not a guru with a crystal ball in terms of price action at all. And I've just been kind of watching and waiting. I did see that there's an article actually on CoinDesk from just the past couple of hours talking about, it says Bitcoin may be gearing up for a rally that sent price to 126,000 last year. I mean, at this point, I agree with David also about the ETFs and impacts on liquidity. And I think, yeah, but I don't know. I think that's maybe the best way to put it. I don't really have a price prediction. I think ultimately, this is not investment advice. I do think with scarcity, the price will rise. I think we will see prices that exceed our prior high. But as to why on any given day it's up or down, I mean...
Josh, you hit the nail on the head when David and I talk about predictions. Some of it, David, is kind of like tossing up numbers in the air and seeing where they land. But David, I want to raise a couple of things there, and I think you hit on it, and it's important. You and I have talked about wirehouses for a long, long time. That percolation of them coming to market is really beginning to happen in a broad way. I want to pivot that as well. One of the unsung commentaries here, I think, has been strategy being kept in the indices. What does that mean for crypto and particularly Bitcoin as a public company holding, and what does that do for value?
You know, it's not clear to me if that story ever really had legs, that it was really being considered being taken out of the indices. Look, these are real companies. Strategy is a real business, regardless of the fact that it is a huge holder of crypto. And I don't know. Look, I think there's a view that some of these DATCOs are really more like funds, and maybe that was a view that maybe they shouldn't be in these indices because truly they're more like funds. But I think at the end of the day, it belongs there, and it is there, and I think it will remain there for quite a long time. So I think that's sort of, I think that's kind of been a little bit overblown in my mind. But no, look, I think there's a lot of positive headwinds, and maybe we dive in now. I'll say one other thing. I think we're right now in like sideways price consolidation, where we're just kind of bouncing between 86 and 96. And, if you have sort of a more bullish view on things, it's not a bad place to accumulate here and hold on, for a period of time. Because I think the one thing we keep seeing is that just like people keep getting blown out of these leverage trades. And every day, 300 million in leverage trades unwound, bullish ones, and 300 million in bearish ones. And so there's a lot of short-term gambling that's going on. And I think we're at the point now where it's become a little more mature, where it has to take a bit of a longer view.
Josh, I got the sense you wanted to add something to that. And David, I do want to push back on something, but Josh, go ahead.
Well, I just had a question, although I'll pose it, but maybe you can then do your pushback before we get to it. I've been wondering, since you guys do have stronger views about what causes what price impacts will be, but with all of this, all of the updates having to do with Venezuela, like, what do you think in the short term and the long term? Like, does that affect Bitcoin?
David, she went there, buddy. She went to the Venezuela story. Josh, I'll weigh in real quickly. And again, politics And
Yeah, politics aside,
this idea that Venezuela has this storehouse of Bitcoin that's been used to fund, going around sanctions, et cetera. I don't know that there's evidence of that deep enough to matter. David, I could be wrong. I simply don't know enough about where that story is going.
Yeah, I'm not sure how much there is either, but I guess the powers that be wouldn't mind it going into our Treasury Reserve. So maybe that end result's not a bad thing, but it's not clear to me how much that they actually had. But I do believe that Venezuela supported things that were against our country's interests, and so not getting into the merits of what was done, I do believe that it'll be a net positive for our hemisphere. So, but I think we can get more information on how much crypto they had and where we think it'll end up.
We're going to have to do a separate political podcast, Josh, now, just talking about opposing viewpoints of these geopolitical things. Josh, it's a great point. David, I do want to pivot back to one thing, if I could, if you'll both allow me. You mentioned, we talked about the DATCOs, we talked about strategy. I sort of disagree with you a little bit, David, as far as whether or not it was a story that might be true. I don't know how much MSCI was really bumping them from the index. But a publicly traded company getting bumped from an index kicks off an entire series of activity from a fund allocation perspective that is often detrimental. And at several points, strategy in this example was below NAV on the Bitcoin that it owned. That NAV getting worse would have been a particularly bad thing. Does that make sense, or am I wrong?
Oh no, I totally agree. I agree with everything you just said. I just think my view is that I think that news story was floated around, and I'm not sure how seriously they were considering removing it from the indices.
Yeah,
I agree. The knock-on effects are meaningful, but I'm just not sure that story actually had a lot of legs to it, and I think it was. Maybe it's a little bit of FUD, or maybe there was at the fringes some truth to it, but I didn't take it seriously that could happen.
A little anti-crypto clickbait is what we're saying.
Yes, exactly.
Josh, David, we had our first legal working group meeting this past Monday of 2026. It was great to catch up with we're now over 200 attorneys in the legal working group, by the way. And I want to get to some of the legislative and regulatory stuff, Josh, because I think there's a lot percolating under the surface. But David, I do want to talk about this morning's news because I think it's worth doing while we're having the macro conversation. Let's talk about the jobs data, which came in at 50K. I think consensus was 75K. So now, of course, pundits are saying this is fantastic. This means we'll see interest rate cuts. David, it also showed, you and I and Josh have said it for years now, it is not the data, it's the revision. So, of course, that meant October and November were also revised down. David, my theory is this is a very weird economy. What does that mean for risk on going forward?
It is. I still am of the view that the economy is stronger than how it's reported in the mainstream media. And also, when I was thinking about the jobs, and again, I want to be empathetic when I say this. Yeah. I do think we had too many jobs in our federal government, and I know some of the jobs that were lost reflected some of those jobs. So maybe in the aggregate, the numbers aren't so bad when you factor in the amount of jobs that were removed from the federal government and maybe state governments as well. So I wish there was a great way to sort of look at it in terms of like maybe what was the hiring last year without state and federal governments, and then look at it this year and see if it was accretive or not. So that's how I've been kind of looking at it. But I don't know how the two of you think about it, but that to me is a more meaningful way of looking at private sector, because those other jobs are really public sector jobs.
Yeah, Josh, do you have any thoughts about it? And you get way too many text messages from us talking about economic data, but I would love your opinion on it.
I mean, before I give any thoughts, I would love your thoughts, Ron.
I
feel like my thoughts are derivative of your thoughts at this point, you guys.
You know me
in terms of this stuff.
You know me a long time, and I have thoughts, definitely. David, I am with you. I agree, but I think there's additional nuance to that. When you look at the macroeconomic picture in the U.S. and you look at things like unemployment unemployment rate dropped to 4.4%, even though jobless claims were lower, and the question becomes why. I think we're missing an angle here One of that is productivity is going up and it's being unreported. Productivity is going up, and I don't want to become part of the AI hype bubble, but there's real movement increasing productivity, which means, and again, there's a human element to this that's very, very important. Some jobs aren't as necessarily needed. So I think part of the reason unemployment numbers are coming down to 4.4 is some companies are pulling jobs. They're not hiring. And I think that changes the dynamic of the economy.
I mean, I agree. I think the question, maybe the best question is, how many sort of quality white collar jobs are we creating? And is that a function of, like, are there AI issues? Are companies hiring? There was this hoarding of employees during COVID.
Right.
That come to an end now. I think there are a number of sort of trends that are sort of conflicting with each other a little bit, and maybe this was the year it kind of shook out. Maybe as we go into 26, some of those tails will be behind us, and then we can get a more clearer picture of where the economy's moving. I mean, I do feel, I know they always talk about this K-shaped recovery. I do feel that, the higher end of the market, people are doing better than on the lower end. I still see that, the car loans, defaults,
credit card balances.
So I do think there's still stress at the lower level. I think there's been more sustainability at the higher level.
Yeah. And that makes it tough for a lot of people. Again, we don't want to minimize
No, not at all.
The human toll of some of that. So it'll be interesting to see where that data plays out. I think the other side of all of this, Josh, I got to pull you in with the legislative and regulatory stuff. And I know, David, you and I were talking about it in the virtual green room. On Monday, Adam and so many of Adam Goldberg, shout out to Adam, who does our policy reports and broadcasts with us, spoke about what's going on with the Clarity Act or whatever it ends up becoming. Josh, what's your takeaway on some of the conversations about the Clarity Act? And I guess the overriding question for those who may not understand law and regulation and legislation like you and the others do is, how important is that for the crypto market?
So those are important questions. So I'll start with the last piece and then work back from that. So how important is it for the crypto market? So I think people have been asking for the kind of market structure clarity for a long time. It does appear, fortunately, that the regulators, the SEC, the CFTC, the OCC, and partly this is because of the executive order last January, and then the president's working group's recommendations and all of these sorts of things, and what has transpired with the Genius Act that have kind of focused, I think, regulatory attention, so that even if we don't get, heaven forbid, right? I'm crossing my fingers, but if we don't get a digital asset market structure bill as federal law, we still are making progress, and the agencies still are engaging in rulemaking and using their other types of powers to provide guidance. Now, I will say on that, of course, there is the background of there's no more Chevron deference. So you always have to think, well, if you have opponents in the market or otherwise, even just for partisan bases, because, for example, right now with the CFTC, for example, there aren't currently at present a Democrat commissioner, right? If somebody wanted to launch an attack and say, hey, this is outside of the scope of the statutory, what was given by statute, right? Statutory authority granted by Congress, then we could end up in court about these things. So I would say, and also we do know that shifts in administration could mean rollbacks of certain types of guidance. Of course, as we've been talking about, now that the industry has become so much more mainstream and so much more institutional, right? Yeah. Is it likely that things are going to be just ripped out and returned to the way they were under, in the, say, Gensler era SEC?
Yeah.
I don't think so. So there's that. Now, with respect to the market structure bill right now, obviously we have been you know, since last summer, when the House passed clarity, we've been waiting for some sort of real passage of something in the Senate, and we haven't gotten it, obviously. My understanding from what I've read is that January 15th has been set as an important date by Tim Scott, sort of a line in the sand, to have a vote for Senate banking on the Senate version of a market structure bill. If it advances, then it will advance to the full Senate, presumably. There are nuances and layers that I'm not getting into here that others like Adam and Dina and you guys know better than I do. But I do think, from what I've heard, some of the sticking points, which, we can kind of recite them by heart, how do you treat DeFi?
Right.
What's up with yield on stablecoins, particularly given China's recent announcement, the pivot about the People's Bank of China now permitting commercial banks to provide interest or yield on yuan-backed tokens, the yuan or whatever it's called. It's not called that, but I can't remember what it's called.
E-yuan or something. I could be wrong.
Yeah, it has an E in it, but I don't remember what the rest is. And then also things like, are there conflicts of interest of various kinds? So, yeah, I kind of answered your question backwards, but that's where I come out. I mean, hopefully we get something passed. I think some fear that if we don't get something passed following this vote on the 15th, that maybe it won't even happen at all this year. But, fingers crossed.
Josh, there's a lot to unpack there. I really appreciate it. And you alluded to something, again, we almost tangentially have to hit on politics, David, right? You mentioned the CFTC with only Republican commissioners. The sole Democrat commissioner on the SEC left last Friday. So we now have an entirely Republican commission, and I'm not weighing in on whether that's good or bad per se, but there really is this contrarian argument that says there are people pushing back now. You need opposing viewpoints. These regulators were designed this way, and that will force some of the folks in Congress to push back and say this stuff can't move forward. David, is that an overblown fear?
I want to get to that, but I've been spending a lot of time on this.
He basically said, "I'm ignoring your question, Ron. I've got something more."
No. I'm going to get back to that, but I think that there's a couple of interesting things at play, and I think Josh hit on it. So in both the Ag Committee and the Banking Committee, the 15th has sort of been set out as a deadline to see whether we get a bipartisan markup of the bill, or will it be a Republican markup? So I think in the first instance, it's really important to see, do we get a bipartisan markup of these bills, or is it going to just be a Republican one? My crystal ball, which is a little cloudier in Washington than the clarity I have when I'm in Florida, I do think that we're going to get bipartisan markups of these bills. But I do think we have some really intractable issues. And one thing Josh highlighted on that I want to punctuate this point is, without the Chevron deference, Congress has to decide how detailed they have to write these bills. Because now that, the agencies can't rely on this deference, Congress really has to decide, do we have to get, really explicit on all of these points in real detail, or can we count on the regulatory agencies to enact these legislation that gets passed in the way we want it to get passed, and for others not to push back on that legislation, on those rules being drafted, because they may not be consistent with what legislation gets passed. Now, that was a mouthful. But that being said, I think that's another issue. And what I do want to tie it into your question, Ron, is that I do think there's going to be a lot of horse trading on these ethics issues. And one could imagine on the Democratic side saying, if you want our support on this, we need a Democratic commissioner approved in the, we need a Democratic commissioners approved on the CFTC, for instance, or we need commissioners on both the SEC and CFTC, but in particular, they would want a Democratic commissioner on the CFTC and one on the SEC. So I think this is really where the politics comes into play. And the last thing I'll say is that I think we have about a 6-week to 8-week window. I think between another potential balanced budget issue that we may have coming up and with midterm elections, I think that if we don't get past the finish line by March, I think this gets punted into next year.
And if that's the case, David, just to go on the political kind of scorecard here, if the House flips, that's a net big negative for crypto going into 2027, correct?
I mean, currently, as things are currently, yes. If, however, maybe what is octogenarians are the folks in the 80s? Maybe if a few of our octogenarian senators or House members decide to retire, that maybe that might change the dynamic. But short of that, it would be bearish for legislation getting passed.
That is a long time talking point, Josh, as you know, between David and I about that, and I don't necessarily disagree with you at all, David. Josh, by the way, you found the perfect lighting and angle at the manor wherever you are. I noticed you are working on that. Josh, I want to talk about something else, and you really laid out this really complex series of conversations, and they're very important. Shout out again to Adam Goldberg, Dean Ellis, and so many others who get the sausage making of Washington. That the three of us, I don't know if we want to know how it all works. We just need to know how some of it works. But Josh, we had another working group meeting this week, and I'm going off script here. I wanted to run this by you. Our enterprise team met this week and was talking about some of the news that three of us have seen, DTCC tokenizing securities, for example. And it really became a conversation about, is it technically possible for us to have securities on the blockchain? And what we realized is it really forces us to ask a fundamental question. Is it a security if it is an on-chain security? In other words, does what we define as securities change? Because right now they're just digital representations on a blockchain. What happens if we're able to issue securities on a blockchain? How would that work? And is that something that comes up in the discussion? I told you I went off script on this.
So yeah, I mean, I think that is something that does come up in the discussion. I have heard from, large asset managers and others about whether, for example, if you have tokenized securities, are those NSM securities that would, or NMS, excuse me, securities that would require the building out of pipes, right?
Yep.
For some of the exchanges. And I think, I mean, it's an important question. It's actually, in my view, one of the reasons why we haven't seen in the US the way we have seen for a while outside of the US, tokenized bonds and things like that in the same way. In part, and of course, a lot of this is changing because we're actually getting guidance and things like that. But a lot of it comes down to, like, are we dematerializing the paper altogether? Right? Is it just living? Are these securities just living on a blockchain without any sort of paper or other documentation? Because one of the challenges, frankly, is like, can you give an enforceability opinion? Right? There are so many things that derive from it, but yeah, I think that topic, not just like the more narrow question that you asked, but really like when you're talking about tokenization or tokenized securities, like what is stapled to that? And what if you no longer have something stapled to it? What if that's all there is? You know what? So yeah, I think those are exactly the kinds of questions we need to be asking.
For the audience, Josh and David certainly want you to weigh in, but for the audience, NMS, National Market System Securities, subject to the regulations thereof, and including best execution. Josh, that came up, and I want to do a shout out to the one, the only Emma Channing. She was on the Enterprise Conversation where we talked about what does a on-chain world of blockchain-based securities look like in the face of best execution requirements and all of the other stuff. David, we've all chatted about this regularly. It's not a technology issue. It's a regulatory issue. Was that a fair opinion?
I'm going to say yes and no.
Okay.
I think if you think of the function of the transfer agent, and being a former GC of one, I had 5 years to think about the function
We
of a
softballed that for you. We knew where that was going, David.
But I think moving it on to a blockchain doesn't necessarily, I think it evolves, and I think it makes it a better system to account for how many shares are outstanding and who has those shares. But that's the thing. That's something that's going to have to happen over time.
Yeah.
So that's just not going to happen overnight. And obviously, we all know how important it is. If you don't know how many shares outstanding there are, you don't really understand what value the shares you have, because there could be more or less than you think you have, outstanding. So I think that's really important. I think the second part of it is more a securities question of like Josh was talking about, and understanding, performance obligations and things of that nature. And, and even there's things that with securities right now, like if there are legends on securities and you have restricted stock, how is that going to be dealt with on the blockchain, and things of that nature. And look, I think there's smart contracts and there's ways to deal with that. But, what's going to happen if securities are on the blockchain and then somebody's grandma lost their share certificate? Like,
Right.
you're going to dial 1-800-blockchain to get that, get those shares reissued. There's a lot of mechanical issues and operational issues that still need to be hammered out. But I'd like to think it's the evolution of where we are going.
Thanks, David. Shout out to our friend and member, Greg Murphy, noted Dole Foods.
Yep.
I probably haven't had enough coffee. Josh, what are we talking about with Dole Foods?
So Dole Foods, if we remember back a long time ago, this was actually something that was talked about a lot back when Andrea Tiniano was the head of the Delaware blockchain initiative, right? And so Dole Foods was this case. Caitlin Long also used to talk about it a long time, because everyone was working together, and Mark Smith. Yeah. So putting us in that time period for a moment, basically there was some sort of shareholder derivative suit. Now, don't quote me on the exact details of this case, but against Dole Foods. And shareholders had to submit notice of claims. And my recollection is there was something like some huge amount, like something like 30% more valid notices of claims than there were issued and outstanding shares of Dole Foods stock. And the reason why was because of how DTCC was holding on behalf of CD, right? And then, going through, it used to be like a teaching moment about, why the benefit of having direct blockchain tracking instead of through the traditional holding way would be preferable. So it's like we're coming full circle to what we were talking about, a decade ago.
Yeah. It's I can't believe it was 10 years ago. Greg Murphy, thanks for the reminder. Totally blanked on that. Josh, David, thanks so much. I know we've got limited time. I think David's waiting on the Gulf Stream. But before I've got one last thing to add to that. When we talk about things, Josh and David, like market structure and some of the challenges there, and like the regulatory overhang of a lot of this, I've been spending a lot of time looking at private markets. And I raised this on our enterprise call, and it makes me ask the question, David, Josh, I'd love your opinion about it. Private markets will actually be the catalyst for securities being on chain, given their nature, because it's easier to do than with existing public market plumbing and laws. David, is that an overreach on my part?
No, I don't think it's an overreach. Look, I mean, there are a lot of investments that are made on private markets. And, if you think about some of these loans that are made, private loans made, and how those are accounted for and how they're shared and sold. Look, I think even with like real estate tokenizations and, selling these tokens that are backed by actual real estate, there really are right now only those sort of secondary markets, the security token exchanges as a place to trade them. And there's not a lot of liquidity on those. And then you have to be an accredited investor in the US. So I don't think that's a stretch at all. I just think that it's complicated. Like, we have to find ways to set, because when you're tokenizing like real world assets, we need to find a way to satisfy people who are buying and trading these, that they know that they are actually backed by those real world assets that people are saying they are. And so I think there's going to be private market development where there's a way to confirm those things. So no, I don't think that's an exaggeration at all.
And Josh, in a world where private equities and private security is still being settled by facts, I would assume you agree with David.
I do agree with David. I also just wanted to mention, since you were talking about best execution, yes, that does obviously apply to securities. What I find interesting is just actually something I'm working on this week, which involves not securities, but where I'm, among other things, as part of a new product launch, right? Negotiating.
You mean for a client, just to be clear.
Yeah. For a client. I'm not going to give any privileged details.
Yep, understood.
But just working through what an orderly liquidation execution policy would be to go along with some other agreements. And it's interesting because concepts of best execution, even though that's not really a thing for commodities, right? Like there is a whole understanding how we're going to think about this and how we do think about it. Of course, some people have been thinking about it for a really long time, I'm sure, but really putting it into words as policies. Once we are starting to see, large institutions begin setting up major lending programs secured by crypto, it's an interesting thing.
And it just shows us how deep and complicated global financial markets are. And I think for a long time, not making fun, but the technology supporters who said blockchain would evolve everything sort of minimized how complicated the world we operate is. David, I know you've only got a couple of minutes. Josh, if I could, want to ask David, are we in altcoin season? David, you've been calling it for a while. I'm waiting.
I'm waiting too. It's like, don't sit by the phone waiting for it to happen. Remember when people were younger, they used to be waiting by the phone to get a return call from someone.
Oh, yeah. And the 10-foot cord that I could take to the room. Yeah.
Yeah. Look, I think a lot of liquidity has been taken out of the altcoins by the other commodities, gold and silver, and the AI stocks, and also some of the crypto stocks. So, we need some catalysts. Market structure probably would be a nice catalyst for the altcoins, especially if there was classifications that they're not security. So there'd be real clarity on that. But again, I think there are really, look, you all know that I think there are certain really strong projects in the altcoin space, but until it's on an app, until people are using it every day, or the use cases are really, people feel them and they're more tangible, it's still going to be wait and see. But I would say no, I don't see it happening in the near future unless there's some great overall risk on catalyst and everything goes up.
David, I know you mentioned silver and gold. So I know you're not giving public advice, but would you suggest I sell my silver coin collection?
Yeah, we're not giving investment advice, but boy, it feels a little toppy to me, but
a little bit.
Look, I think there's probably more retail people buying and selling gold, in different ways, whether it be ETFs or, because there's just so much volume and liquidity in there. And I think a lot of that's gone out of altcoins, unfortunately. So my hope is that altcoins will have their day. I've not given up on them, but it's taking a lot of patience.
David, Josh, thanks so much. I think we'll wrap it up. Josh, believe it or not, we're going to start planning for our Washington, D.C. trip in April. But what are you focused on in the coming week? And I'm hoping you both can join us in D.C. once we find a date. But what's your next week looking like?
So first thing, yes, I absolutely will plan to be there with everybody in D.C. whenever the date is. But yeah, the next week, I think things have started in 2026 with a bang. And so I have a lot of transaction documentation and sort of other stuff
Yep.
along the lines of what I mentioned. But also, and this is something where thank goodness for our legal working group and our meetings, because hearing from Michelle and others, I won't go through the whole group of names, but
It's a long list.
you know who you are, especially about the state stuff, I think is so helpful. And so, I'm fielding questions from a number of clients about, oh, well, what's coming up with this California stuff, right? And how is this going to affect us, even though it's like not going to be effective for some time. So I think there are things like that as well. But I mean, truly, I am seeing huge interest by the institutions in really getting stuff done.
Yeah, and Josh, I do want to do the shout out for our state reps on the legal working group: Michelle Gitlitz, Joe Sicolo out in California, Renato Mariotti, David Pope in Wyoming. Such thought leaders. And Josh, I don't know about you, but I learn from them every time they talk.
100%.
Group. David, what's your next week looking like? And I assume you and I are going to be watching the clock on the 15th to see if market structure gets passed.
Yes, and also I do want to shout out to the legal working group. I always gain a lot of knowledge, and I think what I really appreciate is like the practicality of it. So even though we debate things on a theoretical level, like the real practicality of it. So for me, I'm going to be celebrating the U winning yesterday and going into the So my darling daughter is a freshman there, is having like the best freshman start for sports wise, having the school like the national championship. I started a really interesting new project that I can't really go into a lot of details on, but I'll certainly share once I have the ability to talk a little more about it. A couple of tokenization things I've been working on are gathering steam. And then I'm taking a little delayed vacation. So I'm headed to the Southwest for next weekend's long weekend, which I'm very much looking forward to.
Will golf be involved?
Nice.
David, will golf be involved? Can you hear David? Josh, can you hear me?
No, actually,
I can hear you.
I'm really going to be going off-road. Oh, you guys, did I lose you?
I hear you.
Well, if you can hear me, I'm looking forward to going off-roading. Okay. Like going off-roading, doing a little horseback riding, and maybe a little target shooting.
Very nice.
Wow.
We will leave it there, my friends. Greg Murphy and everyone else who watched, thank you so much. We will be back next week. And for everyone who keeps asking me, the next WSBA Happy Hour is January 29th.